Welcome back, everyone. In today's video, we're talking about AMD stock absolutely cratering following their earnings results. Like, holy cow, it's become the Titanic. So, let's get into it. AMD stock is currently down about 10% on the day. Is the earnings report terrible? Let's find out. They have a market cap of $242 billion. Oh, by the way, Shamao, the AMD kitty, says to like and subscribe. So anyway, let's get into it. AMD has a trailing PE of 147 and a forward PE of 31.25. Now, you might be wondering, what the heck is that? Why are the numbers so different? The problem is the trailing PE reflects when client PC sales absolutely cratered last year. It was the worst downturn in history for the client PC market. That's corrected itself. It's back on the upswing, and that's why the forward PE is so good, and also data center. So we're going to get into the crux of the matter, and let's dig in the earnings. And I'm going to keep this short. I'm going to keep this simple. Oh, by the way, Shamao, it's right there. Isn't she cute? Okay, so yeah, let's get into it. Lisa Su says, we delivered strong third quarter financial results with record revenue led by higher sales of EPYC and Instinct data center products and robust demand for our Ryzen PC processors. Looking forward, we see significant growth opportunities across our data center, clients, and embedded businesses driven by the insatiable demand for more compute. Okay, so let's dig into this. What exactly is going on in this quarter? And really, honestly, I'm just going to focus on one segment, which is really the most important segment for AMD right now, and that is data center. So this includes their EPYC processors, but more importantly, it includes their AI chips, the MI300X, the MI325X, and so on, and all future products in the AI sphere. So anyway, data center revenue came in at $3.5 billion, which is up 122% year over year. So NVIDIA is not the only company that's cashing in on AI. The other company is AMD. Now, granted, AMD's revenues are only a fraction that of NVIDIA, but these are still fantastic numbers. And this does not warrant the sell-off at all. Their gross margins are up 3% year over year. So let me ask you this. What do you think is going to happen to artificial intelligence 5 years from now? 10 years from now? Where do you think the TAM is going to be? Well, let's just go through a couple things really quickly. Number one is OpenAI just stated, this is actually it's a reporting saying OpenAI will start using AMD chips and could make its own AI hardware in 2026. Now, OpenAI is not the only company that's embracing AMD chips. Microsoft Azure uses AMD, which Azure is used by a lot of different companies. So all the cloud providers are providing AMD chips at some function to their customers. Their AI chips. AWS is embracing it. Google's embracing it. Microsoft is really embracing it. Facebook is embracing it. Meta. And they're using it as a secondary offering to NVIDIA's chips. Now, obviously, NVIDIA is the market leader, and they will remain the market leader. NVIDIA has got the Blackwell, the B200 coming out, and it's going to be a monster, and nothing can compete with that chip, or nothing that's coming out soon will compete with that chip. That chip's going to be a monster. Not even AMD can compete with it. But the thing is, AMD doesn't have to beat that chip. I'll go over that in a second. So let's get into this. So Lisa Su, AMD's CEO, she predicts that AI GPU market TAM will grow to $500 billion by 2028, which is roughly equivalent to the annual sales of the entire semiconductor industry in 2023. So that's in 4 years. So what does this mean for AMD? Let's just assume for a second that NVIDIA gets 90% of this market, which I think they're going to get. I think NVIDIA's going to get 80, maybe more than 90% of the AI market, which is the current market share. I think they're going to keep it because they have the superior chips. But they need competition, because who wants to spend $30,000 for an NVIDIA chip and probably even more money for the Blackwell chip? Who wants to? They need competition both on price as well as compute and performance. And there's really only one company right now to provide this competition. And that one company is AMD. They are the only company currently providing competition to NVIDIA for AI chips. They released the MI300X last year. They were releasing the MI325X this year, actually this quarter more specifically. And that's the reason that data center for AMD is up 122% year over year. So let's assume that AMD gets just 10% of this $500 billion market by 2028. 10%. Okay, so that's $50 billion in revenue. What does that mean exactly? AMD's last full year earnings reported the trailing 12 months report $25 billion in revenue. So that is a tripling of the revenue just from the AI growth. This does not include Ryzen growth. This does not include Epic growth, their gaming, which will rebound, or any other segments. Embedded, nothing else. Just based off of artificial intelligence, their revenues should triple. Not just the top line, but the bottom line should more than triple. So what does that mean for the bottom line? Their bottom line, by my estimate, let's go back a few slides, should grow from a 4 PE of 31.25. It should go below 10 on a PE based out of, going out to 2028. So by these metrics, AMD is extremely cheap, and this sell-off is completely unwarranted. A 10% sell-off does this make sense? Data center is up 122% year over year. Does that warrant a 10% sell-off for AMD? I think not. Actually, just a few months ago, AMD was trading over $200 per share, and it's just totally unwarranted. I think AMD is a great opportunity. Obviously, NVIDIA is going to conquer the market. The question now remains, is AMD worth $250 billion market cap? For that, you can check out my DCF. My DCF is available on my Patreon. You can access my Patreon for as little as $5. On there, you can get corporate analyses, DCFs on over 15 different companies, including AMD, NVIDIA, Tesla, and so many others. I have corporate analyses of up to 16 pages per company, and you can get basically everything you need to know about these companies and whether or not they're an investment opportunity. You can actually download the Excel charts and play with the numbers and figure out what you think their fair price valuation is for you. That being said, don't forget to like and subscribe. Thank you for watching. Now I'll see you in the next one.